Hey guys, Max here, and yesterday was yet another interesting day in the markets with some decent gains across the board and a potential development regarding the war in Ukraine, some more problems in China, and a couple other things, so let's just get right into it. So what actually happened in the markets? Well, the S&P 500 rose by 1.2%, the Nasdaq index rose by 1.8%, the rally in US markets basically continued, and in Europe we saw similar stuff, with the FTSE 100 rising by 0.8% and the Stoxx 600 rising by 1.7%. It was a pretty strong day across the board. Now, why was it strong? Well, it was mostly to do with news regarding the negotiations between Ukraine and Russia, that process, and potential progress in that process. There is a development from the Russian side suggesting that the war might be changing. In reality, though, it's all covered in smoke and mirrors. We really don't know what to make of it as of yet, and the market shouldn't be reacting on this news as much as they are, but of course they're going to do that because they're volatile markets as the result of years of quantitative easing. Now, we will go into that in more detail in a moment. Of course, markets also rose a little bit for the other reason that we've been seeing recently, that is just investors are getting a bit more confident in the markets. Now, the only part of the markets that did poorly was really oil stocks, and that's very simple because oil prices fell a little bit. Still, comparatively though, they're doing very well. Now, for currencies, again, there were no major changes, but there was once again a small rise for the ruble as negotiations with Ukraine are inspiring confidence in the country and its currency. Again, I think this is premature, just like it was premature when the peace talks that we saw 3 weeks ago mounted to nothing, but the markets still thought that they would mount to something. Now, there is some very early reports that the ruble is going to be backed by gold here. As of yet, there is no evidence that this is actually true. It could happen in the future. I'm not saying it won't happen. I'm just saying it hasn't happened yet. So if you see those sort of YouTube videos, don't believe them. Now, bonds saw a really weird day. Yields in the US fell and in Europe they rose. The US 10-year Treasury yield is at 2.39% right now after falling 7 basis points. The British 10-year yield is at 1.64% for comparison after rising 5 basis points. Now, yesterday, the huge news we saw regarding the bond markets was that we saw the yield curve invert. Now, there has been loads of talk about this in recent months, but what actually is it? Well, it's where yields on long-term debt are lower than yields on short-term debt when it's from the same creditor. In this case, and in most of the times you hear about someone talking about the yield curve inversion, we're talking about it in regards to US Treasuries and specifically the 10-year and the 2-year. Basically, yesterday we saw the yield on the 2-year Treasury higher than the yield on the 10-year Treasury, which seriously should not happen. Longer term bonds in general should have a higher yield because there's a higher chance inflation will eat away at that return. So 99% of the time, longer term debt has a higher yield. When shorter term debt has the higher yield, like what happened yesterday briefly, it means that the market is pricing in interest rate hikes in the short term, but interest rate declines in the long term, or in other words, the market is pricing in a recession. Now, there is lots of talk about this for good reason. Since 1955, the yield curve has inverted before every single recession, and only once has the yield curve inverted and there has not been a recession. This is, of course, then very worrying. Of course, lots of people saying this time it will be different for whatever reason. You guys know my position. I see interest rates rising in the short term and putting a major shock on our economies. Energy price spikes as well will be really hard to deal with and impactful. Plain and simple, I think a recession is looking very likely, but it could be as far as 2 years away. There is often lots of lag here. The 10-year and 2-year yield curve is an accurate representation of whether or not a recession is coming, but it isn't brilliant for telling us exactly when. Sometimes it can be as close as 4 months away, sometimes as far as 2 years away, but the reality is, I think a recession is seriously coming and the bond market agrees with me. Now, if this is your first time hearing about the yield curve, I would recommend reading up on it. It's really valuable and actually quite interesting what a steep or a flat curve means, and of course the important bit for today, an inverted curve. Now, oil prices as well fell, as I mentioned a moment earlier, with WTI crude oil falling about 1% and now sitting at $105 a barrel. Brent crude oil is sitting a little bit higher as usual at $108 a barrel. Now, yesterday we spoke about China's demand for oil waning, maybe due to COVID and all the lockdowns they're having to put into place, and those fears are continuing to grow, so prices dropped in anticipation. China is the world's largest importer of crude oil. Again, though, this effect hasn't actually happened yet. China's imports haven't decreased yet, but they are widely expected to. Gold prices fell about 1% once again, and it's now sitting at about $1,925 an ounce. There are again some ideas here about Russia especially and how they might be inflating that that value using gold as a reserve, as they can't really use the euro or the dollar anymore. So there's a fair chance we see gold prices continuing to rise soon enough. Finally, in the crypto markets, where were they yesterday? Well, Bitcoin was again at about $47,000 and Ethereum at about $3,400. No real changes there, and in the altcoin market, it was pretty similar, most of them losing or gaining about 2%. No real catalyst for change. Now, there was some bad news surrounding a hack related to Ethereum. Now, it isn't the fault of the Ethereum network. I'm hoping to get a video out on Stoic Crypto later today explaining that, so make sure to check out that channel. Link, as always, down below in the description. Now, what's going on in Ukraine with Russia, and why do markets like it? Well, Russia have claimed that their troops are abandoning their positions around Kiev and Chernihiv and moving them east to Donbass to focus on the real objective of liberating the Donbass. Now, the markets see this as a de-escalation of the war. Russia is no longer trying to take the capital, kill Zelensky, and install a new regime. They're no longer trying to denazify Ukraine. Now, the markets like this, as you would expect. They see this as things returning to normality as the war winding down. But in my opinion, it is irrational for markets to move already based on this minimal news. The markets did the same thing over a month ago when they were dropping on fears of the invasion, but then Russia announced its troops were leaving Belarus and the markets rose as investors got happy, only for Russia to invade the country a week later. Pretty simply, investors can be very stupid and they actually believe what the Russian state says. Why they do that, I really don't know. They lied about the training exercises in Belarus. They lied about invading Ukraine itself. They lied about firing rockets at and killing civilians. There's a decent chance they're lying about moving troops away from Kiev as well. Ukraine have come out and said that they're watching that situation unfold, but obviously they don't necessarily believe Russia either. Western intelligence, using satellites and other sources of intelligence like that, they say that there is some evidence of Russian troops withdrawing, but it's unclear as of yet if this is a decision by the Russian state or as a result of the counterattacks by Ukrainian forces around Kiev that we've seen over the last week. Very frankly, we need to wait and see. It's hard to say what will happen next. But don't make investing decisions based on what the Russian state says. That is, without a doubt, an awful idea. Now, on a slightly funny note, if you have a look at any of my previous videos on Ukraine in particular, the comments are filled with Russian shills saying all things are going according to plan. They're surrounding Kiev before taking it. They've sent their worst troops in first to test the waters. Loads of nonsense just like that. And of course, those people were wrong. Russia's plan simply didn't work, but no doubt they will now claim that this was the plan all along, to send 15,000 troops to their deaths attacking cities in Ukraine that they didn't even want to capture, only to run away with tails behind their legs and then attack the Donbass. Now, in random news, to finish off, Robinhood, the brokerage app, is offering an extra 4 hours of trading per day as it works towards a goal of 24-hour long markets. Now, I've been very critical of Robinhood in the past, particularly of their inability to maintain good press and being overvalued, but this is a smart move by them and it makes perfect sense and a sign that the company is actually moving in the right direction, even if its share price will probably continue to decline in the short term as monetary tightening occurs. The way I see it though, Robinhood needs to increase revenues per customer, and moving towards 24-hour trading makes that more feasible. Robinhood also lost comparative advantage to rivals like Webull, as everyone copied their business model of zero commission trading, and this gives them a differentiator once more, although for how long, who knows. It is though good to see one of these hyped up tech companies grow in actually the right way, as opposed to just throwing money at advertising. When I start buying back into the markets, I will seriously consider investing in Robinhood, especially if it continues to improve services in slightly unusual but effective ways like this. I'm just not quite happy with the price of the stock yet. Finally, there has been loads of craziness regarding GameStop and AMC over the last few days, and I haven't been ignoring it. I've just been writing a video on its own regarding that whole situation that should hopefully come out within a couple of days. In short though, what's happened? Well, there has been a big spike in their share prices, the highest levels so far in 2022. They had been on a steady decline for a while now, and this could be a reversal to that. There is still a very heavy short interest in both of the stocks, which is probably underwater, and that squeeze kind of has to happen eventually. Now, if you enjoyed this video, then make sure to like, comment, and subscribe to boost the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thanks for watching, stay stoic, until next time.